Welcome to Pro Trader Strategies Market Commentary. We are an educational company, so we're here to teach you folks how to trade options. We're going to talk about the markets, the economic data, and see how that impacts the overall markets with some of my market analysis. But ultimately, what we're going to do is talk about how we implement option strategies into a portfolio based on those assumptions we come up with in our market analysis. So in this video, we're going to talk about all of those things. But first, let me talk about myself for 1 second. I'm Eric Wilkinson, and you may recognize me as the Wolfman from mainstream media. So the economic data, pretty light here today. But remember, earlier this week, we had the FOMC meeting. And then we heard Powell talking. And I've spoken about this before. It doesn't look like interest rates are going to rise in 2021. 2022, maybe towards the end of 2022, November-ish, is probably when we'll see that first rate hike. We'll see the taper start to happen at the beginning of 2022. And then 2023 could start really seeing some action in the overall Fed funds rate moving higher. But we saw Powell talking more dovish, saying transitory a lot, sticking with that, saying we are going to talk about raising interest rates, or at least the tapering of the asset purchases. And then we saw Ballard, who isn't a voting member right now, but something to keep in mind, next year he will be a voting member, and he is more hawkish on interest rates. So we could start to see that interest rate probability, the increase in interest rates, which is kind of what I was known for on CNBC, as giving those probabilities of an increase in interest rates. That is going to start getting closer and closer if Ballard starts getting more and more airtime. All right, so across the pond, the only thing we got was Great Britain's retail sales, pretty dismal, negative 1.4%, expected to be a positive 1.5%. That's not necessarily the catalyst causing the retail sector to come off, but it is starting to see some weakness here, and we're seeing those roll over. The banks are getting crushed. Why? Because we're seeing that flattening of the yield curve. So let's get on with the overall markets and see how they're reacting today. We've got gold or crude oil moving higher today, despite the weakness we've been seeing, and based on the economic data, I was expecting this to start to roll over a little bit more aggressively than it is. As of right now, we're seeing, probably because everything is losing money, it's kind of like a flight to quality in a sense, where it's kind of, where are we going to put our money today? And that's why we're seeing crude really kind of hold on to some of those gains. Bitcoin falling 1,200 points on the day. Gold futures, I want to talk about this. The gold miners, some of the gold companies in this sector are finding a little bit of a bottom, and it looks like gold could be finding a bottom. I think it's way overdone to the downside. We have a nice bottoming pattern down here that we could look to take advantage of. When we see these dojis, that's what we're looking for. It hasn't quite pierced yesterday's bottom, which would really be something we would like to see, is have a new low there. Didn't quite get there, so it's a bit sloppy. So this would be a setup where I would definitely wait for a confirmation to the upside. But I'm going to keep an eye on gold, because it looks like we are right there at this value area low that we talk about. That's usually where we start to see some of that momentum slow to the downside. This is the value area low. Value area high is when we see momentum lose to the upside, and the point of control, which is where the most time and volume has been spent. That's a magnet. So right now, the market is trying to draw it up here. All right. So we're trying to draw that up. A pretty crummy shoehorn magnet, but you guys get the drift. We're trying to pull that back up, and it will want to migrate there now that we've gotten overextended to the downside here in gold futures. So risk to the upside is where I would be looking in gold futures. Bonds moving higher today. The 10-year moving higher. That's part of that flattening of the yield curve. That will hurt banks, and that's why we're seeing some weakness across the board in the bank sector. VIX moving higher, testing that 20 handle today. I'd like to get back up in there. I love to sell volatility. If we can get up there and hold on to that for a little bit. Dow Jones well off their lows, over 500 points down on the day. Across the board, the equities are not looking too good today. We can see the NASDAQ as well, off by 120 points, half a percentage point on the day. Not a massive move to the downside like we're seeing in the Dow Jones and in the E-mini S&Ps. You can see the E-mini S&Ps down a percentage point on the day. Something to note is we are getting very close to this 50-day simple moving average. It's right there lined up with the point of control. So when I talk about the support and resistance of a 50-day simple moving average, being above that is usually a little bit more bearish. And we slide below that, that is starting to signal some bearish long-term trend there. Now, this is a little bit different because of the point of control. You just heard me talk about the point of control here. That's where the most actually time for this one has been spent. The volume is down a little bit lower, but the time has been spent up there. And that is acceptance of value when we see it kind of settle down there. So I don't really expect this 50-day simple moving average to really indicate a bearish or bullish trend going forward as much as it normally would, only because you can see it's lined up perfectly with that. So it could easily find comfort in and around that pricing, and popping above and below it isn't really going to give us a solid indication of direction. Look at this. We haven't seen some of this in a long time. I talked about this yesterday. I thought the risk was to the downside. We did get a bit of a bounce, but today I don't think that we're going to get a whole lot of a bounce. We might get a bit of a half back here, as it is a rush to the Hamptons today. Anytime, probably in the next 30 minutes, we're going to see this volume start to really taper off, as it is summer markets. People are going to be leaving, and that usually dries up the volume. Something to remember is we have more retail investors in the market right now than we've seen ever before. So they could be the catalyst to drive this a little bit higher. It's a different paradigm in a sense, with as aggressive as the retail trader has been as of recently. I think that the risk still is to the downside. Can those retail traders make up enough volume to drive this market higher on a Friday with the rush to the Hamptons happening? Something I wanted to talk about with Toyota Motors. All right, you guys look at this. It looks like it is a gem of a trade. If you guys remember in this one, in Toyota Motors, I got into this trade by selling some short calls in here. And the reason why I did that is because we had high implied volatility in here. And I did it on the 8th. So basically right here, and you can see the volatility when we look down here at the bottom here. I'm gonna steal my pen. So right here, I got a topping pattern and then confirmation the next day. That's when I put on this trade, and I went in the July and bought the 195 calls in there. I sold the 195 calls in there for $1.40. The reason why I sold the calls is because we have high volatility, right? I knew premiums were expensive. So when we are good stewards of capital, right, we need to sell when premiums are expensive and buy them when they're cheap. And the only way to really tell that is to look at implied volatility. And with that said, volatility started coming out with the market going against me. I got involved, like I said, on the 8th. The market went against me. Sorry, I tried to draw started going against me, market moving positively. But look what happened down here in volatility. That started coming out. So when I talk about swing trades, using options to increase your probabilities of success, folks, this is the example right here. I got involved on a confirmation. If I was short this underlying, or basically had any other strategy on, I probably would have been pushed out of this right in and around when we broke above that high. Well, the volatility coming out didn't affect or counteropposed the misdirection that I had, but it allowed me to get in there. I could see the momentum when you start getting this kind of choppiness at the top of that move. And then finally, we got yesterday that new high there with a hangman doji at the top of a move. Today, boom, drop, and putting that trade back into a winner. It was actually just a scratch before, despite the fact that it went against me. I was at the 195 short. Remember, that was $10 higher than where we are here. Theta decay, volatility coming out, working in my favor. Direction, I blew it. All right, I got involved too early. But because I set up everything else according to my rules, I was able to stay mechanical with this trade, stay in it a little bit longer, and look what happened. We got that drop. If I was short this underlying, I would have been spun out. I would have waited for a confirmation. That would have happened today, and it would have missed. You would have felt like you missed that trade. But using options, it allows us to play around with that a little bit more. And then, so that trade's still working. I'm trying to get out for 25 cents right now. I think the low I saw was 40 or 43 cents. I'm not quite even on the market at this point, but as this volatility or the theta decay starts happening, I think it'll be all right. I don't think we'll pop up there anytime soon. And then a couple of trades that I took off yesterday. So yesterday I got a little jukey towards the end of the day and took off my Lulu when this thing started popping. If you guys remember, I had on the September, I bought the 320 puts in there for $17.25. Obviously, we got a missed move here and the market started rallying. I think I got involved a little bit early there on a confirmation, but the market popped. I tried to stay in it a little bit longer. It did not work out. So I got out for $8.90. So a loser on my Lulu trade. Took that off yesterday. I'm just going to cover this one up and we'll just go with, what was the other one? XLE. XLE, I added a bearish risk reversal yesterday, and basically that's what the webinar we're going to be doing next week. And I did it set up on this confirmation yesterday. We started getting that breaking down, and as soon as we started breaking below, that's not a very good line there. I want to right about there. Started breaking below there. I was getting that confirmation. I think we're really starting to look to sell off. So in XLE, I did the bearish risk reversal. And a lot of times people will set this strategy around an underlying that they own for a long duration. Maybe you don't want to take capital gains or any of those things. You could set up a bearish risk reversal around a stock that you own and limit some of the pullback that you would be experiencing. You can take advantage of that with a bearish risk reversal because basically you're selling a covered call on that long stock and then buying a put to protect your downside. You can do it as a trade as well, where we set it up to where it's equivalent to basically half of the underlying. So if the underlying moves down by $1, I gain 50 cents on my trade because I'm building it out to equal about 50 deltas. So having said that, I went into the September and bought the 49 puts in there and then sold the 57 calls for a credit of 28 cents. Now, it is imperative when you're doing the bearish risk reversal or a risk reversal in general, folks, that you get a credit, okay? We never want to build out a bearish risk reversal or a bullish risk reversal for a debit. And I show you why in that video, or in the video that we're going to be doing on Thursday. So make sure you guys sign up for that. We just did the, what do we do? The poor man's covered put, which is a longer term bearish move for that type of trade. So if you're looking for a longer term trend, then the poor man's covered put would definitely be a trade, a strategy that I would implement. This is more of a shorter term swing trade. I'm not looking for a longer term bearish trend here necessarily. So XLE got on the bearish risk reversal. I don't have on the ETF. I'm not long the ETF and trying to add a hedge to it. What I'm just doing is adding a trade for downside risk. But I was a little bit worried that we might kind of pause or kind of start trading a little bit sideways in a bit of a trend here because we've got this volume node in here that could be built out and we just settled down. So the beauty in the bearish risk reversal is I don't necessarily have to deal with as much theta decay because I've gotten that credit. So I paid off what I paid, bought the put for, the call, selling that call, paid for financing that, and allows me to be able to play that to the downside a little bit easier there. All right, and then XLE, we got BB. So on this one, I played it for an upside yesterday. It looked like we got a bit of an engulfing call or a engulfing green candle there. I thought we were going to get a little bit more upside movement here. So I went in and bought the July 14 calls in there for $1.51. Now I did that in my IRA and in my trading account, and I did it shorter duration because I thought we were going to get a really quick pop and I might get some of that gamma trade in there because remember, when you get closer and closer to expiration, gamma can really start ramping up and help you out on a quick move. Now, if we are getting that quick move, I'm going to be pulling the ripcord on this trade rather quickly because I did it in that shorter duration. I don't want to be fighting theta decay, but I thought we were going to get a little bit of a pop in some of these stocks that have been beaten up recently. And now that we're getting the rollover, especially in some of the blue chips and tech sector, NVIDIA, like I'm looking through bearish setups, NVIDIA, Adobe look pretty bearish. Some of the other ones on the flip side that look a little bit more bullish, we've seen that retail sector to really get crushed. Nike kind of setting up for a bit of a bounce. Their SPY actually falling down to my trend channel, the lower end of my trend channel there. Let's take a look at it real quick just because I'm talking about it. Almost touching it. Again, at the point of control, we could see this market break out of this trend channel and get stuck here at that point of control. So that's something I'm going to keep an eye on. But again, we've got a doji down here we're going to keep an eye on. Yes, it is below the 50-day simple moving average. I already talked about it lining up with the point of control here, but we're going to keep an eye on this trend channel as well for SPY on this bullish move here. Something I like to talk about when we're looking at these swing trades, it comes down there and touches this area. That is where I'm looking for setting up some bullish trades here. As you can see, when it comes down and clips that, it has a tendency to reverse. So that's what I'm going to be looking for in this trade. And then finally, Kroger, I think is the last one that I need to talk about here. Kroger, I actually played this to the upside by selling some puts. We have some high implied volatility in here and was playing this to the upside. Yesterday, they had earnings and they beat on those earnings. We got that move, but the volatility started coming into this market as maybe some of these retail traders are going and buying the calls, driving that volatility higher to try and take advantage of these moves. That is something I'm going to have to really start digesting in the new age of trading here. Is the volatility spikes usually happen when we see these sell-offs because people are going in to buy puts to protect themselves. Now we're seeing the FOMO trade on the calls where it starts moving to the upside and the retail trader is buying these calls, driving price higher, and that's why volatility is going higher, all right, or reflective of that higher move. So with that said, I went into the July and sold the 38 puts in there for 56 cents. And market just settling down here. Volatility is continuing to increase, just albeit slightly. It is moving higher, and let's see if it's even hurting that position at this point. Yes, it is hurting that position a little bit with that volatility moving higher and the market coming off a little bit today. All right, so that's what I've added. I added LULU, or I took off LULU, added BlackBerry, Kroger, XLE, keeping an eye on Toyota Motors, trying to get out of that for 25 cents. It looks like it's trading around 55. The other thing is eBay making a move here today as well. If you guys remember, I put this on a couple of days or a few days ago. We've gotten that pullback here on my synthetic short in eBay. If you guys remember, I did the October, bought the 65 puts and then sold the 65 calls in there to create that synthetic short. So I'm collecting dollar for dollar on this move to the downside in eBay. So that's working out quite nicely as well today. Breaking below this Fibonacci, and the value area low is a lot lower. The next support level is the 50-day super moving average. So I'm going to let this one ride out a little bit longer. But that's a brief wrap up of everything that I've got going on. That's about all I've got for you guys. Something I forgot to mention, please, hit the subscribe button so you guys get notification for these daily market commentaries where I'm going to talk about all my trades. Watch those videos where or my webinars where I'm doing it on swing trades right now. We're talking about how you spot a swing trade where the momentum is shifting. I go through that and then touch on that. And then I really dig into when, where, and why we're implementing an option strategy around it. All right. So it's not always on a bearish move we buy calls. All right. I have a very bearish assumption in eBay. So that's why I got aggressive and went with that synthetic short. All right, that's it. Also, comments. Love to see the comments. I want to make sure you folks are clear of concept. So please throw anything over there. Love to hear from you guys. And finally, smash that or take that. Bye for now and take it easy.